Ladies and gentlemen, thank you for standing by. I am Geli, your Chorus Call operator. Welcome and thank you for joining the ELVALHALCOR conference call and live webcast to present and discuss the first half 2024 trading update. At this time, I would like to turn the conference over to Mr. Angelos Yetzizoglu, Deputy Group Chief Financial Officer. Mr. Yetzizoglu, you may now proceed.
Hello, and thank you for joining us in our webcast for the financial results for the first semester of 2024. As always, we will give you an overview of our performance, and at the end, we will hold a Q&A session. The presentation will be later uploaded on our website. Let me start by pointing out some key figures. Beginning with sales, we kept the pace from the first quarter, and we achieved an increase by 2.5% to 297,000 tons from the respective period of 2023. Although nothing has changed significantly in markets, our performance in second quarter is recorded positive. Leveraging our performance in volumes, along with optimization in product mix, we achieved a robust adjusted EBITDA to 114 million euros. Our goal to reduce furthermore our net debt remained critical in second quarter. Why was that critical? Because we still operate in an environment with interest rates in elevated levels. In 741 million euros, we dropped it by almost 145 million euros year on year. In CapEx, we capitalized on our already concluded investment plan that ended in 2023. More to discuss later on with more detailed slide. Our net debt to adjusted EBITDA ratio to 3.3 is improved, but we need to keep up with our efforts to increase even more our profitability. But if you see where we stood in 2022, you easily appreciate our achievement. Let's have a quick look at some macroeconomic data to understand the environment we operate in and see how they affect us. During second quarter, we saw metal prices to take an uptrend. Having that in mind, we deployed all our resources in better managing our working capital to mitigate the risks in our net debt. Expectations for recovery created by this increase were not verified. Natural gas prices in second quarter, even slightly, recorded an increase, but still remaining lower than the same period of 2023. We note a small decrease in inflation. However, interest rates are still in elevated levels. Next slide is about cost. What we saw on the previous slide about energy prices is depicted here in our cost breakdown. A significant decline in energy participation from 18% to 13%. Inflation affected all other parts of the chart. Moving on to volumes. We saw on slide 2 that in the first semester of 2024, our volumes were increased year on year by 2.5%. In the aluminum segment, even though nothing has changed in demand significantly during second quarter, we achieved to increase our sales for a second quarter in a row. Can sheet market have been the most positive among the flat rolled products, and also in second quarter, we recorded a better performance in flexible packaging. In the copper segment, volumes are stable in both quarters, with demand remaining weak in all markets and mainly in construction and industrial applications. Let's see how we did in profitability and especially in adjusted EBITDA. Starting from the aluminum segment, it is obvious that in second quarter the performance is improved compared to the first one. Drivers to that were the increased quantities and better product mix. We said in our first webcast for 2024 that foil products encountered significant pressure in prices. In second quarter, we were able to turn to more profitable products, succeeding better results. In the copper segment, we also see an improvement in second quarter compared to first, exceeding the respective period of 2023. Capitalizing on opportunities in markets, our subsidiary Sofia succeeded in gaining market shares, improving even more the product mix, mostly in industrial products. Now, on this slide, adjusted EBITDA per ton depicts what we have discussed till now about the improvement in profitability between the two quarters. Starting from the aluminum segment, although we are lower than 23, we increased profitability per ton from 204 in the first quarter to 270. I want to reiterate that the optimization of our product mix, along with a reversal of the negative trends in certain sectors, such as flexible packaging, led to this result. The picture in the copper segment, despite the weak demand, is even better. Stronger profitability second quarter, with same volumes as the first, and the adjusted EBITDA per ton is now improved by 9% than the same period of 23. Moving to markets, we see no significant changes in shares in both segments. In the aluminum segment, the most dominant market remains packaging, and especially beverages, where we demonstrate an increase from the respective period of 23. In the copper segment, markets are remaining sluggish and no significant changes appeared in our shares. Industrial applications are those that decreasing their share. Moving to geographical distribution, ELVALHALCOR is an export-oriented company with more than 90% of our sales abroad. For the first semester of 24, both segments maintain their strong export orientation, with Europe being our core market. In the aluminum segment, US share enhanced from 8 to 11%. In the copper segment, we increased our share in the European market. We have already discussed volumes and profitability per quarter, so now let's see the consolidated figures for the first semester of the year. In 24, we increased our volumes to 297,000 tons, 2.5% more compared to the same period last year, and very close to 22. In adjusted EBITDA, we are behind 23 by 13.1% in 114 million euros, but I want to remind once again the adverse condition in all markets in both segments. Our revenue amounting to 1.7 billion euros, 3.8% lower than 23. In this point, allow me to say that revenue is a dimension very sensitive to metal prices. What really matters to us is how revenue is transformed to profits. Our EBITDA for 24 in 115 million euros is better than 23 by 14.4%. In terms of metal results, the negative 30 million euros is now positive of 7 million euros. Let's see some more financial figures. EBIT and EBT at the first semester are higher compared to 23. We will see more on the next slide with the bridge for the EBT. Our financial result is better than 23 due to the significant decrease in our net debt. Adjusted EBIT is lower than 23 to 81 million euros. However, in the second quarter, we were able to decrease the gap from the previous year. Now, let's see what brought us from 39 million euros profits before taxes in the first semester of 23 to 60 million euros in 24. We talked extensively on previous slides that in the first semester of 24, both segments, aluminum and copper, encountered headwinds in market demand. In addition to that, we still have all these geopolitical tensions that create uncertainty and volatility. All the above had a significant impact to consumption and to conversion prices, and eventually to profitability, that dropped by 15 million euros. A small increase in SG&A by 1 million. Our efforts to decrease net debt paid off, reducing financial cost by 3 million. We expect in the future to have bigger improvements in costs if central banks proceed with the interest rate cuts they have announced. Finally, we have the positive metal result of 37 million euros. With all that, we reached the amount of 60 million euros earnings before taxes. Moving to cash flow, Strong EBITDA at 115 million euros, with copper segment to contribute more to this first semester. In the aluminum segment, the flexible packaging is a market that we encountered excessive pressure in prices compared to 2023. Interest payments at 24 million euros. Allow me to point out again our unwavering effort to reduce net debt that led to lower interest costs. Despite the increase in metal prices, we managed to reduce our working capital by 28 million euros. We paid taxes. Investments were in target levels at 33 million. The company leveraged its profitability and the lower working capital to repay long-term debt by 63 million euros. We paid dividend 15 million, and with all that, we increased our cash position by 16 million euros. What are the takeaways from this slide? First, in spite of the adverse environment, we achieved robust EBITDA. Second, we managed to counter the increase in metal prices, decreasing our working capital. And third, we created enough space to proceed to prepayments in part of our loans, mostly those with variable rates. Next slide, working capital and net debt. I stated many times in this presentation that the effective management of working capital was and still is a challenging and critical target. Why it's critical is obvious, but why challenging? The answer lies to the interest rates, which are remaining in elevated levels, and in addition to that, to the increase we saw during second quarter in metal prices. So, to reduce furthermore our working capital to 592 million euros, 108 million euros less compared to same period of 23, is in positive direction for the performance of the company. Here, the contribution of the aluminum segment is more substantial, with the copper segment suffering more from the increased metal prices. In addition, we must not forget the supply chain disruption we faced due to the geopolitical tensions. Improvement recorded also to our working capital as percentage of our sales to 18%. Moving on to net debt. On the consolidated graph, you see that we decreased our net debt to 741 million euros, 144 million euros less than the same period of 23. Improvement is also recorded compared to the end of 23 by 72 million euros. Now, only 39% of our debt is on a variable rate. Only 9% of our loans are short-term. With all that, we also mitigate our risk from interest rates. Last slide about CapEx. In the aluminum segment, our investment plan concluded in 23, and we are now shifting focus to optimizing investment returns. Of course, we have outlooks for maintenance CapEx and small improvements. In the copper segment, we started extra investments in 23 to unlock incremental capacity and further growth. To sum up, before we take your questions, even though the geopolitical uncertainty remains and markets are still moving slow, we achieved in the first semester to increase our sales volume. We also did that having in mind that this effort has meaning only if it is combined with the optimization of our product mix. We continue to decrease our working capital, leveraging that positive result to decrease our net debt, despite the uptrend in metal prices and the interest rates, which remain high. Thank you for your attention, and now we can proceed to the Q&A session.
Ladies and gentlemen, there are no audio questions at this time. I will now pass the floor over to management for any webcast questions. Thank you.
I see that we have one written question from PRS Security. Could you please discuss the key trends in third quarter for each segment, demand, pricing, cost, CapEx? Also, could you provide some color regarding the higher sales leverage mentioned in the press release? Thank you. You know that we don't like to give guidance. What I can say is that ELVALHALCOR is very well positioned to leverage broad and diversified product portfolio and capitalize on future opportunities. Now, regarding beverages, you all know that we have concluded our investment plan in the aluminum segment, and we have the installation of the new cold rolling mill and a new lagering line, based on the fact that we wanted to increase our sales in that market, in beverage market, and we succeed. So we feel very, very proud that we have these investments from where we are now capitalizing on profits. The second question from Maria Karagiannaki. Please forgive me, the first one was from Vasilis Romantzis. The second one is from Maria Karagiannaki. How do you expect the rise in energy prices over the summer to affect third quarter results with the new PPA agreement in place? Do you expect measures from the Greek government or the EU to normalize the energy market in the Balkans? Is demand in aluminum continuing to improve in third quarter in expectations of interest rates or lowering in both sides of the Atlantic? Yes, in terms of energy, we have signed a purchase agreement which is related to renewable energy assets in order to reduce our exposure to energy price volatility. And this is helping us a lot in order to reduce our cost. And I think that we presented that in the slide with our cost breakdown. Now, if we expect something from Greek government or EU, yes. I don't want to say that we expect, but it will be welcomed any measure that will decrease our energy cost. That will give us room to increase more our profitability. Now, about demand in aluminum for the third quarter, till now, I have to say that again that we don't like to give guidance, but nothing significantly changed in markets till now. So what we can do as a company is to continue to meet the needs of our clients by producing innovative and high quality products. I don't see any other question.
Ladies and gentlemen, there are no further questions at this time. I will now turn the conference over to management for any closing comments. Thank you.
I don't have any other comments. Thank you very much for joining, and I hope that you are happy as we are with the results of our company. Thank you very much.